Welcome back, friends. This is Rohit Devangan presenting you a very interesting topic, which is fundamental filters, and how do you use them to create a strategy using our custom screener, right? So, like always, what we do here is basically tell you basic concepts, and then we'll take you through the product, how to make best use of the product using these fundamental filters, right? So, basically, who is the key audience of fundamentals? It is long-term investors. That's their primary tool. For positional trader, you should be using that as complementary tool. At least some of the basic checks to see whether because you are looking at a few months to maybe few years time. So you should be looking at fundamentals, that the fundamentals are not really bad at that point of time. Swing traders, it's just good to keep an eye, particularly from news perspective, or if there's a news about that, like what we heard of RBI taking action against certain companies, or corporate result is coming, or things like that, right? And then for intraday traders, you really don't need to do unless the result is coming on that day, right? If the result is coming, then you should be avoiding. One very good example that I would like to tell you about the swing trading and how the result is impacting a particular company, right? So we'll take an example of HDFC Bank. HDFC Bank, and it's very interesting to see the charts of HDFC Bank. HDFC Bank chart. So I'll take you to maybe last 5 years, 5 years, right? So if you see the movement out here, of course, this was more like a COVID-19. So this was a period which is like completely one-off. But when you see that the stock is almost trading in a particular zone, and every time just before the quarterly results, the stock price goes up and the results are somehow not meeting the expectations of investors, so it comes down again. It goes up near the result time, it again comes down. So there are few things which you need to see. Number one is results are very important. Number two is that a lot of confidence on the stock from people, that their expectation is this stock is going to go up. It happens to a lot of stocks at different point of time, and when you see before the results the stock price is going up, that means there's a lot of optimism still left in the stock. Once such a stock gives good results, then it's likely to give a multi-year breakout and kind of a very, very good returns. We have seen this in we are seeing this in HDFC. We have seen this in Reliance, ITC, many more companies. For a long period of time it is in a range, but investor confidence is not lost, it's not falling down. If the investor confidence is bad, then generally the stock would have fallen down quite badly. So which says that the investor confidence is good in the stock. So that's again part of fundamental analysis, right? Just deviating from the main topic, but it's important to know the news and what are the corporate results and things like that. What we are going to cover here is the current levels. So when the market goes up by 1,500 points or 200 or 2,000 points in Nifty, there's generally two senses of things. One is like market is always going to go up. The second section of people feel that market has gone up quite steeply and is likely to fall. It has already made the top. So there are a lot of things which you need to look at. One of the key things that you should be looking at is the PE ratio of the market, right, or the broad-based market. So that is reflected using Nifty 50 PE. So as we speak, it's about 22 to 23, which is not very expensive. The PE ratio at this level can also go up by at least 10 to 20% more, and it has gone below 30. That's where it gets a little more expensive based on the historical look of the PE ratio. So as we speak, the market has gone up, but the PE ratio is still manageable. Then when you look at price to book, that's also not very expensive. Dividend yield is naturally little low because the price has gone up. So naturally the yield is coming down unless the better dividend starts coming in and companies decide to part certain money with the users. So the bottom line here is, as we speak, the market does not look expensive, even though it has rallied significantly. Okay. From fundamental screeners, key things that you should be looking at is basically valuation. Valuation are typically which tells you that whether the stock is expensive at that point of or not, right? So there are few parameters which you look at is PE ratio, PB ratio, PS, and many more, EV to EBITDA, and many more, right? So where do you see those things? So for example, if we go and look at a stock, let's say ITC as we speak. So when you look at ITC, then you'll see that the PE ratio of this thing is 26, which is generally considered as expensive. Price to book is expensive. That's why it's marked as red out here. And then when you see price to sales, it's also expensive. So what does this, or how does this software mark that as expensive or not, right? So basically there are certain criteria. So when you click on about PE ratio, you'll get little idea about that, what PE is. So what is the current price and what is the earning per share? So which tells that where the earning is and where the price is, and that's the ratio which he uses. The higher the PE ratio, that means the price is much higher than this thing, so it becomes expensive. So there are certain industry standard numbers which you should be looking, and this is what it is saying that, so which way it is really good. Generally 15 to 25 is considered to be good, but this will be a good general parameter for you to look at. Now this also depends on the industry. Certain times, if that industry is doing really good, for example defense industry, or at times IT industry, or which industry is doing good. So what you need to do is you need to compare PE ratio of that company. For example, if you look at maybe JM Financials, for example, right? So when you look at it at bottom, you'll find that PE ratio is there of that individual company, plus its PE ratio vis-a-vis its competitors, right? So where does it stand? So when you look at this thing, the PE ratio of JM Financial is 20, which is not too bad compared to some of the competitors. For example, if we go to another company, for example, State Bank of India, right, as we speak. So when you look at PE ratio, and we look in the bird's eye view of comparing PE ratio with its peers, then you'll see that P ratio is SBI is still relatively okay. HDFC is slightly expensive. ICICI is more expensive, perhaps because of the recent rally that it has gone up. Right. So that's how you will be looking at in different valuation things. Right. So the key important ones are mentioned out here, which is also marked with certain colors to give you a good idea. And then also along with that, certain commentaries there, which says that where it is. So the price is too high using its intrinsic value, book value is trending down, so it's not a great from one parameter or other parameter, right? So that's certain commentaries there. And overall, based on our analysis, TSR value index, which we'll cover in a short while, it says that it's reasonably okay from valuation perspective, this company SBI. Okay, the next one you should be looking at is profitability. Naturally, companies run for prime objective of profit, and there are certain parameters which can give you bird's eye view. Those are this thing, ROA, ROE. So when you look at this, so ROA, ROE, these are very important ones. So the important ones are here. When you scroll down, or when you go to ratio screeners and other things, you have you can look at the other aspects of it. I'll leave that to you for you to evaluate individually. But when you come down, you'll see that all the profitability ratios are mentioned here, their charts, how were they previous years, and so on and so forth. Okay. So that's profitability ratio, which tells how good the profit is. So when you look at here, the earning yield is good, tremendous increase in net profit in last 3 years, excellent growth. Certain things are good, but one parameter at least is not so good. So some are very good, some are good, some are not so good, right? So that's where it is mentioned as red. So they'll give you a bird's eye view of where this particular thing is on an individual stock. Growth. Again, growth is important. You would like to invest in a company which is growing, so is your so that your capital also grows, right? So important parameters are revenue, net profit. So those things are mentioned out here. The next one is solvency. So at times companies suddenly, which is high flying companies, suddenly go bankrupt or gradually go bankrupt. So there are certain things to look at. If you are at a more like a higher age bracket group, right, you wouldn't want to take a shock at your the retirement funds and something, so you need to look at solvency. So there are certain parameters which are debt to equity ratio, cash ratio, quick ratio, which tells that in a bad time, can this company manage well or survive if we're to go a little stronger. Then what you have is efficiency ratio, so cash ratio, quick ratio, these are very important ones, right? All these are very well categorized into different segments: stability, profitability, growth, value, and so on and so forth. Then you have shareholding pattern. Shareholding pattern is also very important part, which tells that who drives this company. Is it a promoter driving the company? If the promoter is driving company, and promoter can do a lot of things, right, which a lot of investors may not like, because they have the majority shareholding. Like in this case, the promoter's shareholding is 57%, and the institutions have 35, right? So if there's so many smart money, institutions means mutual funds or FIs, DIs, all these guys, right, insurance companies, they are investing such high, that means this company is really good. A lot of people have confidence in this particular company, right? So this is again a very important part to look at. If the institution, if the promoter has lot of shares, then they can go for a drastic decision. Sometimes that drastic decision is good, sometimes it's not so good. For example, in recent times we have seen Reliance suddenly moving into telecom because the promoter had a lot of opportunity to take a decision. It turned out to be a good decision, but a lot of times it may not turn out to be a good decision. We had a similar situation about 10-15 years back, where one of the leading IT companies, Satyam, the promoters did a lot of things using those influence, and it turned out to be a disastrous thing, and the company went bankrupt. So this is a very important thing to see, that how much institutions have. If they have 20-25% more than that, that means the company looks good. It's a lot of good eyes are watching them. Then next what we have is basically fundamental. Now what you generally do is you look at ratio by ratio individually based on your knowledge, that you may be an expert or you may be beginner or intermediate. So to make life easy, like in technicals, you have a lot of technical indicators, MACD, RSI. Similarly, in fundamentals also, you have certain important numbers which you can directly use, like for example, Piotrowski score. So let's look at what the Piotrowski score is. Piotrowski score is basically a combination of 9 important parameters which covers major things related to whether the company is good for investment or not, right? So when you go back and look at it, you can evaluate where that company is at that point of time, right? So going back there, looking at a stock, let's say we go to RVNL for example's sake, you'll see that what is the Piotrowski score. So Piotrowski score of this is 7, which is considered to be good based on the parameters. Then you have other numbers like Graham number, which gives you fair value. You have Altman Z-score, which tells how stable the company is. For example, in this case, it is 7.9, which is considered to be pretty good. If you want to know more about it, again, you can go here, see what the formula is. You don't need to understand the formula. You can directly see that where it falls. So if it is above 2.99, it's considered to be safe. So that should give you, if you are worried about your capital or investing in a company, then this will be a good parameter to look at, Altman Z-score. Then what do we have is Peter Lynch fair value, which tells you what the fair value is. So let's say we go back to a stock. Again, we randomly pick a stock. Let's say Yes Bank. Yes Bank fundamentals. So the Peter Lynch fair value is missing out here. So the price versus fair value is 0.992, which is generally considered to be good to invest, right? So again, there are a lot of learnings and other things. If you want to learn more, there are a lot of materials available on these numbers, but these are numbers which are created by smarter people who have experience of a few decades. They have been very successful. That's why their numbers are generally used, right? Apart from that, if you are familiar with the system from technical side, we have TSR strength index, very popular. A lot of people use it. Similarly, we have TSR fundamental index. What we do here is, like in this particular case, if you see, there are few ratios, right? What we do is we try to club all those important information and create a single value. So over here, it's not that great when it comes to valuation. But it's slightly better when it comes to profitability. So you'll see that. So why this number is good? There are a lot of parameters. Some of them we highlight out here is like they have like excellent QoQ growth on EPS. Net profit is in last 3 years is trending up, right? So steady growth in EPS and so on and so forth. So what we have done is, for all important aspects, what we have done is we have tried to create a single parameter to help you to filter out a stock, and then you can go further analysis. By no means you should just look at one parameter and just go do it, because there are a lot of factors. These numbers come once in 3 months or once in a year, quarterly or annual results. A lot of things change. Maybe the stock price has gone up a lot, or there's a competitor launch of new product, many more things, macroeconomic things. We have seen quite a few things in last 4-5 years. We have seen COVID-19. We have seen some wars in different part of the world, which is impacting. energy prices or shipping routes, or all these things have an impact on things. So the good thing is, look at these numbers, look at some of the important news related to that, when is the results coming, and so on and so forth, and then you can make things. But to make life simple, we have created certain index which you can use it, and I will recommend you to use it as your first filter. But or for any ratios for that matter, right? You, before buying, you do little more due diligence on those things, and then get there. Okay. Next, what we have is, so we have covered TSR value, we have profitability, we have growth, we have, and stability we have. Okay. Now, friends, we have seen quite a few categorization of financial information, whether in form of ratio or in form of certain financial statement numbers, or in terms of certain numbers created by TSR, which can help you to further filter down on individual stocks, right? Can at least give you a starting point of where to and what to look for, right? But still, it's very tedious when you go and start looking at stock by stock, because there are thousands of stocks in the market, and going through one by one is very, very difficult, right? To solve that problem, we have our custom screener. So first use case that we'll do is, we'll try to look for different ratios, which are profitability ratio, and then solvency ratio, and value. Right. So three most important parts. We'll take a very simple example where we look for P ratio, debt to equity, and ROE. So straight away going into the custom screener on left hand side. If you're familiar with this, great, custom screener. If you're not familiar with it, then there's a video about it, which we'll see where that video is. So the video about this particular screener is both in English and Hindi, just below the custom screener. Or if you want to know about the product, then the entire overview of the product is in English and Hindi is available out here, right? So straight away going into financial ratios. If you know where financial ratio is, great. If you don't know, then also what you can do is, you go here and you can look for something of your choice, which is PE ratio. PE ratio. So you'll directly get into PE ratio. What we are looking for is a bit between 15 to 25, which would be a good number, not too expensive, not too badly beaten. We have gradually seen where to look at the key numbers, that of what good numbers are, but these numbers are always in relative. When the market is booming, everything is going up, then number is naturally going to go up, maybe like a 25, 30, maybe a natural number. Certain stocks like Titan has always been on very expensive side. Another stocks which is going round the going round is Nvidia, which is like just broken a new record, almost gone into most valuable company, right? Its P ratio is high, but still people see some of the other aspects, news related aspects, and the sales and other things, which typically is not covered in quarterly results, because there are a lot of other momentums which happens between quarterly results and the time we speak, right? So depending on that, generally on a normal market, 15 to 25 is a good number for, as far as P ratio is concerned. So we'll select those stocks. That's number one. Number two, we will select debt to equity below 0.5, which is again, which looks like from stability perspective, it's a good number. So it is latest year is below 0.5, and we'll go for a third factor, which is ROE, which is above, let's say, 25. That's again a good number. We'll try to look for stocks in NSE 500. How many stocks are there? So basically, looking at three important criteria, we get only six stocks, right? So this is how you can save a lot of your time and get to what exactly you are looking at. So basically, such a research would have normally taken a lot of time, right? But using this custom screener, it's matter of a few seconds or less than a minute, right? So that's the idea of this particular screener. And then further, once you see that these are three criteria which are being met, or maybe you want to relax a bit of ROE 20, then further you can alter and see that, what are the stocks which meets your criteria. So ROE above 20 along with PE ratio and low debt is again a good thing. That means with lower debts, it's giving good return on equity, and it's not too expensive also. So you'll get 10-15 stocks, and then we know how to look at it. For example, if you look at Dr. Reddy's fundamentals, all the important fundamentals are available here, right? Similarly, if you are looking at financial statements. All the financial statements are also available out here, right? So going back into the screener, the first one which we saw is basically mixing of various different important ratios, like P ratio, debt to equity, and ROE. You can create your own set of things. If you are more on the value side, then perhaps you would be not be looking too much of ROE. You will be looking at PB or PS or dividend yield, all those kind of things. You'll be looking EV to EBITDA. If you're looking more on the growth, then you can mix ROA, ROE, ROC. There are many more things that you can be looking at, right? The second one is mixing two guru numbers. As we have seen that certain numbers are created by industry experts, and they were kind enough to share that with the rest of the world. One of them is Piotrowski score, second is Altman score. What Piotrowski score tells you is about the investment grade stocks, and Altman tells you that stability. So let's look at some of the stocks which meets these two conditions. Again, if you don't know where those things are, for your easy search, just type here Piotrowski. You'll immediately get Piotrowski. Our objective is to get something which is above 7 and 8. So this is how you'll get out of NSE 500 stocks. Let's see how many stocks are there. Only 31 stocks which meets this criteria, which clearly helps you to filter down stocks or narrow down stocks to a very small number. And the second number is Altman Z score, which is above 3. So let's look at stability as well as investment grade. So how many stocks we get? We get about 21 stocks, right? So this can be a great starting point for you. So whatever you guys generally trust on valuation or profitability or statement, we have certain set of parameters, and almost in the same lines we have mentioned out here: guru numbers, valuation, efficiency, solvency, profitability, right? All these numbers are mentioned out here. The next what we have here is financial statements. So the key for financial statement is you would want to get into a company which has a decent revenue and decent profit. So let's look at a company which we reset it. We go into financial statements, we go into revenue. We want a revenue where the revenue is more than 10,000 crores, and its net profit is more than its net income is more than 500 crores or maybe 1,000 crores, right? So we want really good companies that where not only revenue but its profit is also good, right? So which will tell you that it's a big company, number one. It's and profitable as well, right? So not running on debts, on visionary things and things like. It's a real company which is showing profit. So we get about 138 companies, right? So you feel free to add more criteria, whatever criteria you are looking at, and then you can mix and match any criteria over here, right, among the balance sheet fields or cash flow fields, or basically income statement fields. Any of these fields you can keep on adding one by one to get your perfect mix of your research. The next is CAGR. So what we are looking here is basically revenue is good, but we want to see company, in the previous example what we saw is just revenue. We want to see revenue, whether revenue is growing or not, right? So there's a very easy example. Again, we'll look at revenue because that's an important part. We look at CAGR, compound annual growth rate. So when you look at something which is CAGR of last 5 years, CAGR growing by, let's say, 25%. So when you look at this thing, that means the company's revenue is, or top line is growing by at least 25% annually on an average. So we get about 60 companies which meets this criteria, right? Now on top of it, you may want to add another criteria which we used in the previous example, right? You want companies value to be greater than 10,000 crores, right? So that's how you can mix two criteria out here, out of same field, which is revenue out here. When you look at this, then you get about 10 companies where the revenue is pretty decent, which is 10,000 crores, as well as CAGR is 25%, right? Next, what we have here is trending up. So we'll remove this one, and what we want to again see is that revenue CAGR is 25%, which is good, but is it really increasing every year, or it was just one good year somewhere in between, or we started with something really bad 5 years back, right? So we'll see. For example, if we just run this company, right, run this thing, then what we may need to see, or what we may see here is the baseline may be really bad. For example, if we look at certain stocks which were pretty badly beaten during COVID-19 time, right? So you will see a very good CAGR because the baseline was very bad. So in order to overcome that thing, what we can do here is we can add another field out here where you want to see that revenue is also growing by is increasing year on year by for at least 5 years, right, along with CAGR. So when you look at this, then you get about 24 stocks where the annual growth rate is 25%. For 5 years, and every year the revenue is growing, right? So that's another criteria that you can this tool can help you to fulfill. The next what we have here is historical deep dive. So what you can do is you can compare that the value. So basically here what it tells you is basically it's increasing, but by what percent it does not tell you, right? So we have another example where we go into revenue field, we add into compare with history. So latest year revenue is greater than previous year by 20%. Then you can add another such field, latest year history is above or previous year is greater than previous year minus 2 by again 20%. Then we add another field here which says that the previous minus 2 is greater than previous minus 3 by 20%. So what we are getting is company which is growing at a very good pace for last 3 years, and each year growth is more than 20% compared to previous years. So you'll see that 56% of the companies which matches this criteria, right, which matches this criteria. So feel free to increase it to a larger number, or also what you can do is you can also add other criterias out here where you see that the annual revenue is more than 10,000 crores. You can add other criteria, and when you add this criteria you will see that only 13 stocks are there, right, which are meeting this criteria. You can feel free to add other ratios out here, right, where for example if you want to see that its ROA is also greater than 25%, then when you go here, okay, there's no stock which meets this criteria, maybe 20, little too strict out here, right? So again, no stocks coming out. The idea here is to create your own system where things are or the way you would like to see in balance sheet. So what you would typically look at is balance sheet, and then you calculate few things out here and there. This system will help you to do it in a flash of us in less than a second, less than a minute, right? Within few clicks. Okay. The next what we have is compare the number with average. So what we have seen is quite a few criteria. Now I want to see that the latest year growth is greater than at least 25%. It's greater than at least 25% of its 5 years average, right? So what we do is we went into average out here. I set 5 years, and the latest one is greater than 25%. So let's see if there's any stock which meets this criteria. So there are about 56 stocks which meets this criteria. Again, feel free to add more criterias out here, right? Add another thing, our favorite one, which is revenue more than 10,000 crore, right? So you'll see lesser number of stocks, which are about 13 odd stocks. So with one single field, you have various different options of trying out different permutation and combination, right? So that is the idea behind this screener, to give you extreme level of flexibility. You can feel free to add anything from cash flow or from income statement or balance sheet or other ratios, or you may even want to add something which may not be really great, but if you're looking at investment, then the price is above 200-day moving average, right? You can feel free to add fundamentals as well, right? So out of 13, 12 stocks are running above 200-day moving average. So that criteria also you can keep on adding in your criteria, whether it's RSI or moving average or any other criteria. Or also you're looking for stocks which are a little bit away from 52-week highs in order to get you some bargaining things, right? So far by at least 10% away from 52-week high. So when you are looking at stocks, so there's only one stock which has beaten down meeting all these criteria. So maybe I'm not saying that this is a stock you should be looking at. This could be a good opportunity to enter because all your criteria are met from fundamental perspective, and the stock has given a good retracement, right? So feel free to mix and match other things. Then what we have is stock where the trend is changing from negative to positive. So again, going back here, resetting the information, and this time what we are looking for is where last year it was negative profit or basically loss, and this year is profit. So basically it's a turnaround. So let's say net income, we add net income where it is trend change. So from negative to positive, we run the stocks. So there are quite a few stocks which meets this criteria. For example, Interglobe, or there are quite a few stocks which are meeting this criteria, right? So look at the stocks where the profit was negative last year and it has turned out to be positive this year, right? So these are excellent stocks where there's an early sign of turnaround. Once such things are there, this could eventually turn into a good running stocks. For example, if you look at Lloyd Metal, after the results, you see that there's a decent growth, not this thing. This is where the result would have come somewhere, right? So it has given some good growth. Some stocks are giving some good growth, some are not so good. But the idea here is to get you the change in trend. From last year it was negative, this year is positive. That means it is on a better path in future, right? So when a lot of investors see, they get into those stocks early on. Sometimes a lot of smart money comes in there at an early stage, and then eventually that can lead to a good rally in coming days, where looking at smart money, a lot of weak money also gets in there, and stock makes a good rally, right? What else we have out here is, I think that's pretty much what we wanted to cover. So feel free to use this screener. May look little difficult or overwhelming, but once you start using them, use the search filter criteria, start using them. It's very easy and natural, and with so much of feature, it's not very easy to make a very simple screener, right? So if you need any help and support, you can always reach out to the numbers mentioned below, or you can request for demo, or you can send your query using contact us form. One of our executive will be reaching out to you, right? So that's pretty much what I wanted to cover out in this session. Hope you like this session. If you like it, please do share, like and subscribe, so that it gives us information that our this work is being appreciated by you. Even if you don't like it, just put a comment out there that this could have been better because of this, or this is something which we didn't like. We'll be happy to work on those feedback. And as always, right, about 70 to 75% of the requirements of late is coming purely based on your feedback. So your feedback is taken very seriously, even though it may take little time, but we'll definitely look at all your feedbacks, right? Till we meet again with another very interesting presentation, I will say a goodbye here, right? See you very soon with another quite interesting topic. Yeah.